So Atossa was the name of a Persian empress that lived about 2,500 years ago. That's not what this video is about though. I'm going to cover a company that I think is probably named after her called Atossa Therapeutics. These guys are an early stage biotech startup company. They're chasing two potential drugs. One is an oncology drug for breast cancer and the other is a fairly promising COVID-19 therapy. This one is very, very early stage. It's kind of a difficult company to analyze. There's no revenue, there's no fundamentals, but there is a really, really interesting opportunity here in both of those potential markets. And this stock in particular has a ton of attention right now. It's getting a lot of interest. It's getting a lot of talk online. There's a lot of retail interest, but it's not a meme stock, not at all. I think there's a legitimate investment opportunity here, and that's what has people excited. So I want to dissect this one. I want to see what has people so interested in this company. I want to talk about what they are doing in terms of trading this one and investing it. I want to take a look at the fundamental opportunity, the market, the potential drugs that these guys are developing in terms of a bull and a bear case. I want to try to see if this one is a good investment. And stick around at the end and I'll give you my opinion on that and my analysis of which case I think wins. Let's go. So, I say these guys are a startup. They actually were a startup back in 2016. They had an IPO that opened up around $45, I think. It sank down to about $1 in 2018. So kind of a disaster story in terms of an IPO. I don't know what happened there. Maybe the initial offering was mispriced. A lot of them are. And nothing much happened between then and the start of about 2020. And at that point, before the pandemic, ATOS had an early stage product pipeline that showed quite a bit of promise, but not a lot of investor interest. I think people were still burned from the price action, out of that IPO that went so badly. But then I think interest started to pick up during the early stages of the pandemic as they got a little bit closer to potential approvals and some more data started coming out about their oncology drug in particular. So what got investors interested? So specifically, they had multiple therapies in the pipeline at that point. They made a pivot to a COVID therapy that looked fairly promising in about mid-2020. That sparked a ton of interest. Anything to do with COVID at that point was getting a lot of eyeballs. And at the time, they had a pretty low valuation, right? So the company looked pretty attractive. Word got out, and a lot of people started bidding the price up, which sort of brings us to the current situation.
What's the upside potential?
Okay, so the first thing we can base the bull case here for these guys is this drug that they're developing called Endoxifen. So, one of the most commonly used drug therapies for breast cancer today is a drug called tamoxifen. And tamoxifen is very, very widely used. It's an estrogen inhibitor. Endoxifen, however, is a little bit different. It's an active metabolite of tamoxifen. It's produced in the body as a response to having taken the drug. And by giving it more directly, instead of relying on tamoxifen to produce the metabolite, if you give that metabolite directly, which is what these guys are trying to do, it appears to bypass a lot of the negative side effects, the toxicity of tamoxifen, and it has a lot of the same benefits in terms of what's going on. And in fact, it looks as though it may even be more effective than tamoxifen with fewer side effects overall. So if that's true, if that all works out, if approvals work and if they can develop that drug, then I think it's a huge impact to that breast cancer market. There's absolutely an unmet need there in terms of, something that doesn't have the toxicity of tamoxifen. I think if they can actually close the gap and get to that approval and marketing stage, that's a huge win for everybody. They have another product in the pipeline here, which is sort of a delivery application. It's something called a microcatheter. So it's a very highly specific delivery system for different kinds of therapies that can avoid hitting healthy tissue and more directly target a drug therapy to exactly where it's needed. So if you can do this, you can avoid sometimes the negative side effects that are associated with different therapies, and so you can more tightly target a specific area. That's highly useful in a lot of oncology scenarios, for different cancer therapies. So this one is exciting because I think if they can actually get this product moved further along, they can potentially open up multiple markets that we don't even see today, right? right? And I think the market might be missing this one a little bit. There's more than just the immediate application that they're chasing for this microcatheter technology. If they can really pull this one off and be successful, there's a heck of a lot more out there that could potentially develop multiple revenue streams, and that's a really good growth story for the future. That's something to keep a really close eye on with these guys. The third point here is the COVID-19 therapies that they developed back in 2020, about the middle part of the year. There's two potential therapies. One is sort of what they call a chemical vaccine alternative. So it blocks the virus from replicating, which is different than a vaccine, right? A vaccine actually stimulates your own immune system to fight off the virus. This is different. This basically blocks virus replication. Instead of using the immune system to do it, the drug does it more directly. So very, very different than a vaccine. And I think the potential there is it can target folks that are either vaccine hesitant, or it can target folks that can't take a vaccine medically for whatever reason, right? Whether it's a reaction, side effects, allergies, what have you. There's, I think, a lot of potential there to sidestep some of those vaccine issues with this alternative chemical-based vaccine therapy. So there's a lot of promise there. The other one that they're chasing is a nasal spray that appears to potentially block a COVID infection before it can really begin and take root. And that's pretty novel, right? I think that has a lot of potential application in folks that either haven't taken the vaccine or will not take the vaccine. You know, maybe this is an alternative therapy that they could actually open up a market for. So I like this. I think that there's potential to open up a pretty broad market here if they succeed with these two therapies. The fourth point here is the market opportunity overall for both of these potential avenues, right? For the breast cancer oncology side of things and potentially the COVID side. Both markets are sizable. The breast cancer market in particular is huge, even in the US alone, right? It's a big market, and there's an unmet need, you know, and that's really what we need to look for in these biotechs. It's not about whether you can just produce a novel drug, but is there an unmet need that clinicians are actually going to go out there and say, yeah, we need to buy this thing, we need to actually deliver it to patients because it solves a real problem. And I think it absolutely does, right? Endoxifen in particular fills an important gap in the treatment timeline. It can be given at a point in the progression of the disease that is different than tamoxifen. So it could potentially be used in addition to and get a lot of additional benefits from that. And you know, look, I think the COVID therapies could experience a similar market, right? I think if people remain vaccine hesitant, I think if the infection lingers the way a lot of people think that it will, you know, over the next several years, then we're going to need therapies that are not just vaccines. And so, you know, something like this, I think, could have a pretty healthy market opportunity. The last point I'll make here is the balance sheet. It is really good. I got to say, a lot of these biotech startups, they basically just shovel cash into a furnace. They have mountains of debt, and it's basically a race to try not to go bankrupt, right? To try to get approvals and develop a market before you run out of money. That's not true with these guys. Their debt situation is really good. They've been aggressively paying down debt since about May of 2019. They did have some debt at that point, but it's all but disappeared. It's all but gone to zero at this point. And they have about $100 million cash in the bank, and their burn rate is nowhere near that. You know, it's down around the $15 million mark. So very, very healthy cash position. I don't think these guys are in danger of going away anytime soon. There's not a lot of risk in terms of running out of money, which I like to see in these very, very early stage companies.
Let's talk about risk.
Okay, so let's build up a bear case. What is potentially going to go wrong for these guys? Well, one thing that I don't like is, the perception around this pivot to a COVID drug. You look at the company, basically these doctors are experts in oncology. So what do they know about infectious disease, right? That's about as far from oncology as you can get. It's a different area of expertise medically, you know? And so what made them go there if their primary drug therapies were so promising, right? Like, why are you trying to walk and chew gum at the same time when you could just focus on those primary drugs, push the approvals, start developing a market, start developing partnerships? It seems like there's a lot that could be done on that primary market without the distraction of a pivot to a completely different therapy in a completely different market and in a completely different field of medical expertise, right? So I kind of scratch my head a little bit, and in the back of my mind, I'm a little bit concerned. Does this indicate a lack of confidence in their primary product pipeline? There was some dilution of the stock in May timeframe, which kind of makes sense. The stock price shot up around that point, and really, if they hadn't taken the opportunity to dilute at that point, it probably wouldn't have been the right decision. So they did, right? They diluted the stock a fair bit, and I think they've shown their willingness now to dilute if the price is right. So I think the risk is that, if we see a more of a run up in price, they're probably going to do the same thing again. It's probably a prudent business move. But as a retail investor looking for an opportunity to buy in, it's tricky, right? If you know that dilution is coming, it makes it hard to time a purchase, right? So you got to look for a dip. You got to look for a healthy haircut off the current price before you would actually buy in, because or you suspect, I guess, that extra dilution is coming, which is going to hammer the stock price in the short term. So you got to be careful and sort of time your purchase around that, which makes it a little bit awkward. The third thing I'll say here is that, these guys have no revenue whatsoever, and there's no revenue in sight, right? They're a long way from any amount of revenue, because you have to get past approvals. And then even after you get past approvals, you have to actually deliver to the market. You have to scale up manufacturing. You have to go out and find customers. You have cost of sales. You have cost of acquisition. You have marketing. A lot of those expenses related to sales are not reflected in the current numbers. So the business has to evolve into an active delivery sort of model, and they have to figure out how to recognize revenue. That is so far off that, you're going to need to hold this company for quite a while there's absolutely no earnings. And I think there's a lot of potential for that market development to take way longer than investors would like. Impatience will set in the meantime, because remember, after approval for these biotechs, there's not a lot of exciting catalysts, right? And you sort of enter into this no man's land where there's no real news, right? It's just a bunch of marketing and salespeople hammering away, trying to get out to market, and it always takes longer than you think. And the risk is that the share price languishes in the meantime. So anybody that buys today, I think, has to sort of anticipate that lag in the price is ahead of them for a year, whatever time frame it is, before they can actually start seeing revenue. And there's more positive catalysts then to again drive the stock price. You're going to need to be patient. The approval risk is always a thing with these biotechs. Approval is not a foregone conclusion. It certainly looks really good. Early data would indicate that there's really no significant side effects to Endoxifen. It's just the normal nuisance related things. So if that's true, great. But you got to take a look at this realistically and say, look, only 3% of oncology drugs actually make it to the approval stage. So that's kind of their odds here. Now, they probably have better odds than that because they're further along in the approval timeline. And the thing is, though, is if Endoxifen is not approved, if they actually don't make it, the company's mostly worthless, right? So, on the one hand, from a diversification standpoint, it's a good thing that they have this COVID therapy in the pipeline. But at the end of the day, even if that succeeded and Endoxifen failed, this thing is going to crater, right? So this is very much a risky bet on the eventual approval of Endoxifen. That said, I'm actually fairly optimistic that they're going to see approval. At this point, I don't see any reason why they wouldn't. The last point I'll make here is the market for these alternative COVID therapies is still really difficult to predict, right? Right now, it looks like we're still going to need something. Herd immunity is probably not going to kill this thing. It's not going to crush the infection rate, especially if these variants continue to show up. That said, we don't know that, right? So vaccine hesitancy could be overcome. In the next year or so, as these people that are vaccine hesitant see no real side effects, more and more people are getting vaccinated. If more countries, I think, come out with vaccine passports and lock people out of events and travel and things like that without a vaccine, I think that's going to overcome a lot of vaccine hesitancy potentially, and maybe we will get to herd immunity in some time frame. So it's really difficult to predict where that's going to go. If that alternative market for COVID therapies does die out because the infection goes away to a significant degree, or if vaccine hesitancy is overcome, then really the potential market for these alternative therapies is way smaller than these guys might like, and really there might not be as much revenue as we would hope in this particular one. So very difficult to predict the opportunity versus the risk on that market. Okay, so in terms of wrap up, early stage biotechs are all binary bets to my mind, right? So either they win big or they fail their approval, they fail to develop a market, and the things are a complete disaster, right? There's not a lot of middle ground in these biotech companies. And so personally, I don't like investing in biotechs for that reason. They seem like a very, very binary sort of bet. I like companies with a little bit of diversification in the business model generally, so it's why I tend to stay away from these things. Now, the thing is though with ATOS, if you are a biotech investor, if you like that sort of binary bet, then this is a really good one to my mind. I think the business is solid. I think the financials are good. I think that they stand a really, really good shot at approvals. So, you know, if you're willing to make that binary bet, this is the one to bet on to my mind, because I think their chances are really good. The bear case is weak overall in this one, right? And the bull case is really, really strong on the back of the position that the company's in and the potential market, and how close these guys are, or at least the chance that they stand for approvals in this one. So if you're into biotech, I think this is a super buy. I think it's a good place to get in. You know, the current price is not bad. It's gotten a run up. It's got a lot of eyes on it, but I don't think it's reached the unreasonable stage. I think supply and demand is still balanced at these current pricing levels. And I think if there's any dip on this one, and if you're into biotech, then yeah, I think this one is definitely one to buy on any significant dip. And that's it, guys. That's my story. Please throw that video a like, and I'll see you all on the next one.